Today I want to give you some real-world examples for the reverse mortgage. My name is Jesse Rivera. I'm a mortgage broker. I specialize in reverse mortgages. The goal of this YouTube channel is to educate you on reverse mortgages. It has such a bad rap, and one of the biggest hurdles that I have to overcome every time I talk to someone about a reverse mortgage is all the myths and the misconceptions. So this YouTube channel is dedicated to informing you and educating you about reverse mortgages. Go ahead and click that subscribe button, click that bell, and you'll get a notification every time there's a new video upload. So let's get started. This is Bill and Sarah, ages 70 to 65. Their home value is $600,000. They still have a mortgage, about 15 years left on their mortgage. Their mortgage balance is $275,000. They're both retired, both in good health. Between Social Security and a small pension, they don't have a whole lot left over each month. Their goal is, their payment is about $1,425, and they pay their taxes and insurance on top of that separately. They just want a little bit more income to enjoy their retirement. They want to travel more. They want to visit the grandkids more, go out to lunch. Bill wants to play a little golf with his buddies. They just need a little bit more income each month. So our solution is just to have the reverse mortgage pay off the mortgage. And this is typically when people think of reverse mortgages, this is what they think of, just paying off the reverse mortgage. Bill and Sarah will not have a mortgage payment for the rest of their life until one of three things happen. Either they both pass away, and they both have to pass away for the lender to at the time when you have to pay the lender back. If they move out of the house, they have to pay the lender back. Or if they sell the house. If none of those three things happens, they can stay in the home for the rest of their life and not have a mortgage payment. So that's kind of huge. So we're gonna use the reverse mortgage to pay off the mortgage, their current loan. They're gonna have no payments for the rest of their life. They still have to pay their taxes and insurance yearly, just like any loan. This is just a regular loan, except there's no mortgage payment. They do have to pay their taxes and insurance yearly. And so they have $1,425 more each month, which makes a big difference to them. So that's the first case study that we looked at. And that's what most people think of when they think of reverse mortgages. So let's do a little twist on Bill and Sarah. Same scenario, 70-65, same home value, but they paid off their mortgage. Their mortgage is almost done. They only have a few more years on their mortgage. They have $75,000 left on the mortgage. Their payment at this point is $975 plus taxes and insurance, which comes out to about $355 a month. So in this case, we're gonna, as in the previous example, we're gonna use the reverse to pay off their mortgage, of course. But because they have so much equity in their house, in their home, we're going to give them an additional $750 a month income for the rest of their life. So that $750 a month will continue until both of them pass away. Not just one, not just Bill and Sarah, until both of them pass away. Or if the other two happen, like we talked about, either they sell their home or they move out of the house. So they'll have that $750 a monthly income for the rest of their lives. And they still the taxes and insurance that in this scenario is paid by the lender, which can be an option. There's a couple things we have to consider. So in this case, they have a little over $2,000 more each month, and we can do this because they have so much equity. So this is a different scenario. It's just not paying off the mortgage. It's actually increasing their monthly income by $750 a month more besides the mortgage. And that $750 a month goes on for the rest of their life. And in the rare case, in California, this rarely happens because home values appreciate so much. In the rare case that their home is worth less than the loan amount, let's say the loan amount let's say the loan amount goes to $1 million and their home is still worth $600,000. So when they pass away, their heirs will only have to pay the lender back $600,000, not the $1 million, only the $600,000. So You can never owe more when you pay back the lender. You can never owe more than the home is worth. And like I said, in California, that rarely happens because our homes appreciate so much. It kind of keeps pace with the interest being added to the loan. And that's what happens if you get a loan for 3% interest. Instead of making that payment each month, that interest just gets added to the loan. But because our home values go up so much, you will rarely ever owe more than the home is worth. A different example, Tom and Angie. So this is a little bit different. We're going to look at it in a different viewpoint, looking at the reverse mortgage more for a financial planning scenario. So Tom and Angie, they're 62, 63. They're both still working. They enjoy their jobs. They both have nice salaries, and they've done well for themselves. They have a nice nest egg, good 401k. Their Social Security payments will be good when they retire. They'll have no problem in retirement. But they want to buy a second home. They want to be closer. They want to buy a home closer to the grandkids, so that they can go when they want, and they don't want to touch their retirement accounts. So we're going to use the reverse mortgage. We're going to use what's called a line of credit. So we can tap into the equity of the home. And Tom and Angie have no mortgage payment. I forgot to tell you that. They have zero mortgage payment, so zero monthly payment. But we can tap into that equity. There's $600,000 of equity. We can tap into that with a $300,000 line of credit, which you don't have to take out right away. You can take out when you need it. So what they're going to do is they're going to take out $75,000 for the down payment for the second home. They're going to buy a little condo near their grandkids, and they're going to leave $225,000 left in their line of credit, which they can access whenever they want. That line of credit has no monthly payment, unlike a regular home equity line of credit, a HELOC, which does have a monthly payment. So this line of credit with a reverse mortgage has no monthly payment. So they're going to leave that in for other expenses of the age. So what can they do with it? What can you use the line of credit for? Well, there's a bunch of things. You can pay off high interest rates, credit cards and loans. If you got credit cards in 18% interest, 25% interest, just pay them off. Line of credit right now is at 3.5% interest. So you'll save hundreds of dollars each month paying off those high interest rate credit cards. Home repairs and upgrades, get that roof repaired, get that new HVAC. If you're going to stay in the home for a little bit, if you want to age in place, which a lot of people are opting to do, get that home ready. Do your home repairs, the roof, get everything all repaired, and maybe some upgrades if you're going to age in place. You might need some ramps. You might need to redo the bathroom and the kitchen. Use that money for that. Retire early. You can have a little bit of extra cash flow each month if you just want to retire early and not have to worry about money. Pay for medical bills, right now or in the future. In-home care. People are opting to age in place, and you might need a little help as you get older. It's a great use for the line of credit. Travel, just have fun, right? Buy an RV, go to Europe, take a cruise, have some fun. Use that line of credit to enjoy your golden years. If you worked hard your whole life, use that equity in your home, which if it sits in your home untapped is useless to you, right? You might as well dig a hole in the backyard and throw it in there. Use that money to enjoy your retirement. People always say, "Well, I want to leave that to my kids." If you asked your kids whether they'd like to have your home when you pass away, or whether they want you to have a fantastic retirement, 99% of them will tell you they want you to have a fantastic retirement. Believe me. Pay for your grandkids' college. That's an awesome one. Buy a second home. Buy a rental. Use that for a down payment from the rental. That money for the down payment, you don't have a mortgage payment for it, right? You don't have a monthly payment. That rental gives you cash flow each month. Annuity, same thing. Buy an annuity. Take that $300,000, buy an annuity, and you could have a monthly income for the rest of your life. Buy a smaller home. You can use the reverse mortgage for purchase. That's a different topic, but you can do that. Delay taking your Social Security. That's a different one. So let's talk about that one. That's an interesting one. Jim and Liz, age 65, 62, their home value is $600,000. They don't have a mortgage payment either. and no monthly payment. But Jim wants to retire. You know, he's 65. He's done. Liz likes her job, so she's going to work a few more years. But Jim wants to retire, but he doesn't want to tap into his Social Security yet, because the longer he waits, the more he's going to get each month. So what we're going to do, this is a nice solution. Jim and Liz are going to take a $2,000 monthly payment for the next 5 years until Jim hits the age where he gets his full Social Security. And that's something we can do. It's a larger payment, but it's only for a shorter period of time, 5 years instead of the rest of your life. So you can take a larger payment. They have enough equity to do that. And they have a $180,000 line of credit for other stuff as they age. So they have a little cushion. They have a little backstop in case they have big medical bills, or if they just want to travel. So that's a fantastic use for the reverse mortgage. If you have any questions, let me know. Put them in the comments. I hope I'm starting to convince you that reverse mortgage doesn't deserve the bad rap it has. In fact, one of the videos I think I'm going to do next is all the protections reverse mortgage has now and how safe it is. It's a great product for the right situations. It's not for everybody. Come on, it's not. No loan is right for everybody. But it's worth talking about. It's worth exploring to see if the reverse mortgage can help you tap into your equity if for your golden years, or just to get rid of your mortgage payment. It's a great product in my opinion. Hope I'm starting to convince you. If you have any questions, put them in the comments. I'll try and answer them as soon as I can. If you want to talk more about it, give me a call. Shoot me an email, and we can talk about it. Thanks for watching, and I hope you have a great day.